Candlestick formations. Each candlestick tells a story. When you get a few together, you can get an idea of the potential upcoming market direction. We use Japanese candlesticks when we trade. The advantage to using these is they have a way of hinting to us what the market will do almost right away. There are certain formations that candles make that tell us what the market consensus is. Candlestick formations can be a red flag to a trade that we're currently in. Often we might get a reversal formation halfway to our target, and this is an instance when you'd consider closing the trade early and keeping your hard-earned profits. So first we're going to take a look at an engulfing candle. This is a two-candle formation, and it will appear at the top or the bottom of a large market movement. There is a small body candle followed by a big body candle of the opposite color. The larger candle's body will be larger than the body of the previous candle. We can see the two images on the left-hand side, the bullish engulfing and the bearish engulfing. The bullish engulfing will appear at the bottom of a downward move, and this would give us the heads up that the market might change direction and move up. The bearish engulfing will appear at the top of a market move. The harami, or the inside bar. This is also a two-candle formation that occurs at the top or the bottom of a market move. The first candle has a larger candle body, which is followed by a second candle with a smaller candle body. In Japanese, harami means pregnant. The body of the second candle will be contained within the body of the larger candle to the left and be of the opposite color. Again, the images on the left-hand side shows us the top image would appear at the top of a market move, and the second image at the bottom would appear at the bottom of a market move. Next is the doji and the long-legged doji. Now, a doji is a one-candle reversal formation. A doji has the open and close at the very same or near the same price. The body of a doji is very narrow and the wicks are very short. The long-legged doji is very similar to a regular doji. After a big move in either direction, up or down, it hints to a change in the market direction. The body is small, but with a long-legged doji, the wicks are much larger. This formation is only worth anything if it appears at the top of a market move or at the bottom of a market move. If it shows up when the market is moving sideways, a doji does not mean anything. Next, we have the gravestone doji and a dragonfly doji. Now, a gravestone doji has a long wick, and the open and close of the dojis are at the bottom of the candle. So the long wick is at the top. It denotes the end of an upward trend. The gravestone doji we're going to see at the top of a market move. The dragonfly doji is the opposite of a gravestone doji, as the dragonfly doji has its open and close at the top of the candle formation. This is a formation that will clearly determine the bottom of a trend. This formation has a very long lower wick and will appear at the top of a market move. The hammer and the hanging man. The same candlestick formation as one another, the hammer appears at the bottom of a move and the hanging man appears at the top. The candlestick has a small body and a longer lower wick. There will be either no upper wick or a very tiny upper wick at the top. The length of the lower wick will be approximately 2 times the length of the body. The color of the body doesn't much matter. If it shows up or the top or the bottom, the color of the body can be bull or bear. It does not matter. Railroad tracks. Now, this is an instance of a quick change of the market's mind. Railroad tracks are two similarly lengthy candles that are longer than the average surrounding candles. In an upward market movement, there will be a strong surge upwards, and the next candle will be almost a complete undoing of the initial candle's move. This would be the same in a downtrend. They are good reversal candles in a moving market. Longer than average wicks. Without looking for specific candlestick formations, the one thing that I pay the most attention to would be the wicks. Whether or not the candle body is longer or shorter than the average, a long wick will often point to a change in direction. Now, a long wick on a single candle means that during the formation of the candle, there was more than usual aggressive push back in the opposite direction. A long upper wick is bearish, and a long lower wick is bullish. Simultaneous wicks. A series of lower wicks after a move downward is hinting to a potential move back up. A series of upper wicks after a move upward is telling us there is pressure to sell. The bodies on the candles don't have to be unusual in length, and there doesn't have to be an exact number of candles. 2 candles with these wicks are called tweezers, but you will come across 3 or 4 candles, all with longer wicks on one side of the candle. If we take a look at the images on the left, if we have a series of candles at the top of a move with wicks on the top side, more wicks that you see on the top of the candles than at the bottom, there is selling pressure. The market is going to want to change direction and move down. When the market has moved down, and then you start seeing a series of wicks that appear at the bottoms of the candles, this is buying pressure and the market is going to want to move back up. Thank you for watching this DVD. Being aware of how the markets move and what kind of telltale hints it leaves behind can improve your trading dramatically. Go through your charts and look for the different aspects we discussed in this DVD. Look for levels of support and resistance and practice drawing trend lines. Scroll through your charts and look for chart patterns and see if you can begin to identify some candlestick formations. Identifying these formations will take some practice, but as you become more familiar with them, you will start to find them more and more quickly. No matter how you trade, everything discussed in this DVD will play an important role in your evaluation of the markets. Have fun with this. This is very exciting stuff. Again, thanks for watching.